Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day regardless of this fantastic red candle we saw here yesterday. Broke that support level. We got to talk a little bit about some stark realities here and make sure we understand generally what might happen next here. So if you're new to the channel, keep in mind I love teaching people to trade. I hope you can learn something here today. We're going to take a look at some high block capital data, make sure we understand big picture. Whales are extremely active. We're going to talk about that and what that means. And also, ask us a quick favor, help us grow our Twitter community here. We just started over a new channel that's considered as cash trading. Check that out on Twitter, of course, link down below if you want. Please just help us, like, follow, subscribe, the whole 9 yards there. I greatly appreciate that. Oh, also, too, to my members who are getting those emails about KYC for BitGet in the US, we got you covered. BINGX has every country covered, actually, as a matter of fact. They specifically focus on Canada, Europe, Oceania, US, and UK. So be sure to use this link down below, of course, to ensure that you can benefit from this trading bonus, $100 trading bonus, essentially, with no volume or deposit required. Be sure to check that out in your own time. Again, that's just kind of a transition over there because a lot of exchanges in the US are highly regulated. Of course, other countries too, but if you're impacted by that, use that link. Make sure you use that to effectively salvage some options here in the US. So that being said, what we're going to take a look at here, actually, we're just going to jump right into high block capital first, and then we're going to look at some macro data too. We're going to look at the monthly, kind of see where we're at there in the big picture. But when it comes to the high block capital, this is something that's really important to note, of course, and obviously, we know that there were some liquidations yesterday, but it's still occurring here today. So careful with some of those long positions, of course. 25,000 is that exact level that we could lose and see potentially 23,000. We'll talk about that as well. And just the fact that we have some support levels, of course, between here and there, but that volume between 25 and 27 has effectively been filled, right? We got a lot more volume above the price point, some key level resistances we're going to talk about here soon. But what that means here is that when we see the liquidation data coming through, we can kind of see that there's not a lot of longs being opened here today. Okay, yesterday shorts ruled the roost, right? A lot of longs closed out effectively, considering the fact that they got squeezed out, of course. Same thing here with the shorts. Look at how many shorts are active today. These are how many shorts have been active or opened effectively in the last 24 hours versus longs. So longs are break even, shorts are heavy. So we got some heavy shorts right at this level. So keep that in mind. The majority of the consensus is the price is going to continue to lower. Again, just based on how many short positions are open. We can also see fear and greed index starting to drop like a rock. So, a lot of different regulations coming through and just some terrible news in crypto. Things are finally starting to come to fruition. Okay, so taking a look here at the longs, we got a few late longs here at about 24.9. They're slightly in profit, and I venture to guess the inverse as well for shorts. Pretty much the same thing in that sense where they're right at 24.9. So 24,900 seems to be an area in which there's a lot of focus. And again, we've got more shorts open at that level than longs. So that should tell you something. It doesn't necessarily mean that it's 100% going to go that direction, but it does tell us that the bias is short, heavy, and the fact that the price should continue lower from here. Once again, that's kind of the consensus. So let's take a look here at the monthly and kind of see what's going on, because monthly and weekly closures are important to note. We'll look at that on smaller time frames too, but just to kind of understand here, we are below 50 on the RSI, and that's never a great sign. Okay, so we look at its history here, of course. Bitcoin minus the most recent data here from just say May of last year until February of this year, we saw the RSI above 50 pretty much the entire time. So we're back in that position now. Again, it's not a guarantee because this candlestick hasn't closed yet, but it's looking fairly indicative that we're going to see a candlestick closure this month at under 50. So at the below half mark, basically below that resistance. Okay. So again, just important to really kind of recognize what that means for us. That implies that we may be stuck under this range for a little bit longer, and that we haven't truly broken bullish. We got this MACD-FU, as I like to call it, where the price is supposed to come up here and converge, but instead it pivots and turns itself around. Okay, so we do not have a convergence on the MACD. We're going to see a strong closure this month or next, 30, 35, 40,000 in order to see us swing that upwards, right? So the bottom line here is that just because we're converging, we're still converging technically, we haven't officially converged, and that's an important thing to recognize, okay? So that's also, I wouldn't say bearish, but it's not bullish. Right, if that makes sense. Take a look at the simple moving averages. This is a kind of a point of contention here. This is supposed to work as a support. Again, the month isn't over yet, so it's not definitive by any stretch. But if we see right here, we got 25,500. That was essentially our support level yesterday before things tanked, right? And that is effectively what should hold as a support here on the moving average. Again, I like to emphasize the word should and possibly could. And keep in mind the only other time that we've seen the price below 50 on the RSI is back here in March of 2020. We know what that was. That was COVID. That's when the price went down below that. But obviously, we're no stranger to being below 50 on the RSI and, of course, the moving average. So those are just two things to recognize here, okay? So the bottom line and key takeaway here is that now that we're above that level, ideally we have a candlestick closure to this month at 25.5. That'd be a huge, big deal for us because if we close below that, it could imply we have a few more months of downtrend, okay? So again, we're not out of the woods yet, but we're not in the woods, if that makes sense. I'm not sure how to describe that, but the bottom line is that we're not in fantastic shape, but we're not in dire straits either. The month hasn't closed. We're only halfway through the month. Try not to, think so morbidly. But the bottom line is that we do have slightly more bearish factors on the macro that are telling us that the price could continue lower. Similar scenario here as well. This weekly candlestick hasn't closed yet, but we're tentatively below, right? So we're halfway through the week roughly, or we got a couple days left in this week. We got to recognize that we could come below that level, and if so, we'll be back in the same territory that we've been in before. So we do have that last ditch effort there at 25,000 to hold as a support, preferably 25.5. Okay, I think that's important to note. But this is a significant MACD divergence here, and anytime we've seen a MACD divergence, it's continued pretty strong, right? All three times we've seen the price action drop very hard as a result of diverging. So this could be a sign here that this little uptrend here for the last 6 months is come to an end, and we're going to be downtrending for a little while. Okay, if that is the case, I recommend dollar cost averaging, just something to always consider. I'm filling my bag every 1,000. So in other words, putting a healthy amount every time the price drops by 1,000 for Bitcoin. So now that we're 25,000, I went ahead and filled up. If it's 24, 23, those are also going to be places in which I'm trying to add to my position. Okay, again, just something to think about. But anyways, what we're getting at here is that the weekly and the monthly are not fantastic by any stretch, but they are not officially closed yet either, right? So we got to recognize that that's tentative for the moment. But if we look on the daily here, we can kind of recognize if we take just a quick look at the monthly lows. Last month low is right there at 25,900. So closing below that point this month would be disadvantageous. Okay, we want to close above 26,000 as a safe round number this month in order to have any leg to stand on for potential further increase. Okay, if we close below this level, there's a good chance that'll hold as a resistance and the price will come down. Okay, we can also see a very similar scenario here for the weekly too. The weekly is potentially going, or at least previous weekly low is 25,300. We close below 25.3, we'll be in a position where we're going to have to consider that to be a resistance. Okay, so again, these are just some things to kind of recognize and understand. Absolutely important to note. Okay, so let's take a look at the daily and kind of work our way down here. We'll try to make this quick. I know you probably have a busy lives, but I greatly appreciate you watching, and thanks again so much for the support, honestly, to those of you who have been watching for a while. Comment below if you have. I'd love to hear how long you've been watching the channel. It's really cool to work with my older members there. What I'm getting at here is what we want to look at is the RSI. This is a stark reality. We've seen this before, but the RSI continues to lower. Okay, as we get closer to 30, that builds a little bit more support. I'm not saying by any stretch that we have a support level of 24,781, but it is positive in the sense that the price being this low and the RSI coming lower, that even though there's more room for downside, there's potential bounce off that level. Because in most cases, it's rare for us to see the daily come very low. We've seen it before once when we hit 30 on the RSI, and that was back in March. That's just before the price took off. Okay, so again, the price comes down to just say 30 on the RSI, that'd be a case in point where I'd consider taking a position based on that overextension. We're not there yet, still has room to run, so try not to get too excited. MACD is still diverging. We see that clear as day. Nothing we can really note there. That does come to an end eventually, but at this moment, we can see that this super trend here, based on average true range, is continuing to descend, right? So we still have a situation where the price action is going to continue lower. We have no reason to believe it's going to just jump or bounce from here. Again, you got to keep in mind we have a lot of volume support at this range, if I recall correctly. Actually, correction, no, we do not have too much volume support. Most of our volume is based on the 20,000 to 22,000 mark, which reminds me, in fact, just to kind of note this here as well, with our Bitcoin dominance, or correction, the CME futures, we got to recognize that we have a pretty significant gap here between 20 and 21,000. Now, do I think we're going to hit that right away? Probably not. It'll take a little bit to get there, but we keep having this fundamental news updates that come through that are just consistently negative. The price will continue lower. SEC is wreaking havoc in the United States, causing most of this fear, uncertainty, and doubt. Okay, so a lot of that, you got to rise above. You got to become better than that. And again, consider transitioning over to exchanges like BINGX, for example, that actually allow for you to operate in the U.S. But what I'm getting at is that this CME gap could get filled, and if and when it does, I'll be happy to invite that in, if you will. If it does happen, we'll probably see a candle wick all the way down, and the price will recover from there. Again, if you take a look at this most recent CME gap that was just filled here recently, in fact, we can change the color of that because that was filled. We are looking at a situation where the price action wicked up here. Look at this, wicks up and turns itself right around. So oftentimes CME gaps are filled pretty quickly and then they reverse themselves. So if 20,000 does end up happening, keep in mind it's probably going to be very short-lived. Okay. Again, just some kind of things to think about, big picture, right? Not trying to concern you, just trying to educate you, because that is my role here. So taking a look at the 1 hour, let's go ahead and wrap things up here. We can take a look and see, clear as day, we're underneath the cloud, right? So it doesn't take a rocket scientist to know that we are on the wrong side of the tracks as far as a long position is concerned. However, it is important to note that if the price doesn't decrease soon, you should consider closing your short position, because you would be effectively, ending this momentous trend. Okay. In other words, even though we still have momentum to the downside because it was such a swift, hard shift to the downside, basically a massive sell-off, we can see here that with the lagging span intersecting the price action, that's a cue to let you know that we're losing this descending trend and that there's a good chance that the price could recover. Again, it doesn't mean you just go long because of it. It just tells us, though, there's a stronger chance that the price should not continue lower because it hasn't continued and this trend is so brief. Okay. Again, just something to kind of think about. Take a look at TD sequential. Nothing really to note here. We came down to an 8 here previously. We're running up to a 2, resetting to a 1. That doesn't tell us a heck of a lot. In fact, when you have these type of sideways actions, it really doesn't tell us anything. TD sequential is better in larger, more consistent trend lines. The thing we want to take away here is that we have this Fibonacci retracement level, the 0.236 at 25,000. I'm going to round up and say 25.2. We've also got this previous high, which was supposed to be a support level, blasted right straight through that big surprise. A lot of longs got squeezed out at 25,300. So 25.2 to 25.3 is now a point of resistance. Okay, so you got to recognize that's going to be an area that's going to be difficult to break through. Okay, which implies further downside is more likely than the price to come up. All right, so again, statistically speaking, we're looking at the price coming down because of that. But once again, if you take entry here and you take some profits in this range, that's not that bad of a strategy either. Because at the very worst, we see the price come up as a dead cat bounce, get rejected off that resistance range, and come back down. That's a very common characteristic. So to me, honestly, no trade is good trade right now, and I recognize that it's difficult to really be positive about that. But if you look at the overall volume here, just take a look at how let's find a better chart here. This guy, yeah, this will work. But generally speaking, we're seeing a lot less volume in the most recent past year, minus these little spikes, than we had before, right? So as volume continues to dry out, we start averaging ourselves below this moving average, then there's a good or greater chance that the price will continue to struggle. Okay, we have more volatility with lower volume, right? So pay attention to volume too, and kind of think about how that works. If there's less volume, then things are going to be a little bit more sporadic, right? And we're seeing a lot of sporadic behavior because folks are pulling out and they're not really trading as much. And that's why we're seeing here with this whale data, the whales are having a field day right now because retail traders are nowhere to be seen because they're getting demolished, right? And or the fact that they're staying on the sidelines, letting the whales control the market. Now keep in mind, whales are much more consistent when the price is down than when the price is up. So with the price being down right now, that leads me to believe we're getting closer to our bottom due to the simple fact that the whales are more active. Okay? So those are, again, just some things in the back end you want to kind of look at. All right, I hope that was beneficial and educational. I'm so sorry. This is a very long video today. If you made it through the end, congrats and kudos. Well done. You are effectively an awesome, gold star member, and I greatly appreciate your support. If you fast forward to the end, shame on you, because there's tons of information in here that you need to kind of know, and you're kind of doing yourself a disservice there. All right, one last thing, of course, help us grow our Twitter community, of course, over at Cash Trading, link down below, and it's a really awesome experience to be able to benefit both fundamentally and technically, have a lot of great updates and things that are super relevant to know, because trading isn't all about the charts, but I can tell you that that's a large part of it. And unfortunately, the Federal Reserve meeting yesterday didn't help at all either. So Either way, thanks again for joining me here. Hope you have a great rest of your day. We'll see you in tomorrow's video. Take care.